Hello guys, let us look at the elements of income statement, or what was previously called profit and loss account. And I want to look at what are incomes. I want to look at the first element, which is income. I want to look at the first element first, which is income. And income, this refers to revenue generated from trading and non-trading activities. For instance, when you make sales, the income you receive or the money you receive is called income or revenue because it comes from trading activities. Sometimes you can earn some income from sale of non-current assets, which becomes a gain. Gain may be on disposal. This becomes a revenue, but this revenue is not from trading activities. It is from disposal of assets. Gain on disposal of assets. That still is income generated from disposal of an asset as a gain. You can also receive rent income, and your main business is not real estate. Hence, rent income is income not from trading activities, but other activities which are not core to the business, which are not core activities of the business. Hence, this is income from non-trading activities. Let's look at the second one, the second element here. The second element is expenses. The second element is expenses. And the expenses refers to cost. These are costs that are incurred by a business. These costs are either incurred during trading or even when the business is not trading. And these costs include the following. We have rent paid. I am very specific, rent paid, because when you receive rent, rent becomes an income. When you pay rent, it means you are the tenant, hence that is an expense. When you receive rent, it means you are the landlord, and that is an income. So we have rent paid. 2, we have commissions paid. Commission paid. We have what we call the salaries and wages. Salaries and wages. 4, we have stationery. Stationery refers to any item that is bought mostly from the bookshops. We can have staplers, biro pens, pencils, rulers, paper punch. Any item that you mostly buy from a bookshop falls under stationery. Here we have electricity bills. Here we have what we call water and sewerage. We also have discount allowed. Discount allowed, this is the discount you allow to your customers. That is an expense. When you give customers discount, it is counted as an expense. We also have carriage outwards. Carriage outwards is the cost incurred to carry goods to customers. The after-sale service cost of carriage to customers to their premises is, we call it carriage outwards, and this is an expense. We also have other expenses here. We also have telephone bills. We have what we call the telephone bills. We can also talk about motor vehicle maintenance, motor vehicle maintenance bills. We can also talk about even meals to staff. That also falls under expenses. These are some of the expenses you will meet when you are doing accounting, and some other expense is bad debts. When you have sold goods to customers on credit and the debt is not recoverable, it is called bad debt. And that is counted as an expense to the business. We also have what we call depreciation. Depreciation. That is, decrease in value of an asset is an expense to business. When an asset decreases in value, we call it depreciation, and that is an expense. Maybe last and not the least, and not the last expense, but in my list, the last, we will have what we call increase in doubtful debts. Increase in doubtful debts. Increase in doubtful debts. We talk about increase in doubtful debts because this is a provision you make. Increase in provision, we can just be specific. Increase in provision for doubtful debts. When you had made a provision for doubtful debts and that provision increases, it is an expense. However, when there is decrease in provision for doubtful debts, this becomes an income. When there is decrease in provision for doubtful debts, it's counted as an income, while increase in doubtful debts is counted as an expense. Thank you.